All right, hi everyone. Welcome to our weekly trading forecast for the month for the week of 25th May to 29th May. All right, so my name is Dylan, and over here with me is JJ. So let's kick off with the dollar index. All right, so this is the dollar index. Let's take a look at the 1 hourly chart. So in the 1 hourly chart, we can see that the price has been trading in a range so far. All right, so what happened last week is that price actually came down from the top of the range. Okay, it fell all the way somewhere in the to the middle of the range. We saw that there's some support right here. It went down a little bit lower, then it started to retrace upwards. So since the price has yet to reach the bottom, which means to say that in this week we can still look for opportunity to sell. So let's look at the 4 hourly charts. All right, so in the 4 hourly charts, we can see that previously, okay, there's a rising structure right here where it was broken somewhere at this level. Okay, if you go to 1 hourly charts, we can probably be able to identify where's the supply zone. So we can see that this area, okay, is actually the supply zone. Okay, because this is where the price broke below. Okay, there's a small candle right here showing indecisiveness, but in the end it fell even further. So which means to say there might be some buyers being trapped right here. So now that we have seen the price has retraced extensively, okay, somewhere near to this supply level, this supply zone, it means to say that in this week itself, okay, either the price might, pull back a little bit further and start to drop, okay, or it might just start to fall at the beginning of the week. And if we were to use a Fibonacci, this is right now somewhere near the 61.8% level. So if the price were to pull back a little bit further, reaches the 61.8% level just below this supply zone, the price may start to turn and start to fall as well. Okay, so that is for the dollar index. Next, we have the euro dollar. So again, let's look at the daily charts. All right, so similarly in the daily charts, okay, we can also see that the euro dollar is actually trading within a range as well. So previously we were actually talking about this symmetrical triangle, which we saw that the price actually climbed from the bottom and all the way it actually broke above the top of this symmetrical triangle. But at the same time, it actually went into this supply zone just right at the top. So price finally got supported at this price. And in fact, if we were to go to the 4 hourly charts, we can see that this is actually a bearish back pattern. Okay, the price completed this back pattern somewhere just below the previous high right here, and it finally started to fall again. So if we look at what happened previously, okay, we can see that okay, every time when the price starts to fall, okay, there's always a significant pullback, okay, before it continues to drop further. Okay, similarly right here, when it fall, okay, sometimes the pullback might be smaller as well, okay, it depends, but definitely there will be a pullback before it continues to fall. So the same thing for right now, okay, because at the bottom we still have some enough space, okay, for us to sell and to profit from it. So we want to also wait for the price to pull back, okay, and then look for opportunity to sell. So the price to look out for, right? Okay, again, we want to see where's the we want to identify where is the supply zone. So we can see that price actually broke out from this level. Okay, if you go to the 1 hourly charts, okay, we can see that there's some support right here, and eventually it broke lower. So this will be the supply zone that we are looking at. So again, price may retrace. Okay, maybe somewhere nearer to the supply zone, or maybe back to the top of this previous symmetrical triangle. You might find resistance and it might start to fall. Okay, so similarly, we can always use a Fibonacci retracement, and we realize that for euro dollar case, it probably will retrace at the most back to 38.2%, and it will start to fall. Like maybe if we look at the example right here, okay, if you pull a Fibonacci level, okay, it only reaches somewhere at 50%, and it started to fall already. So somewhere maybe between 38.2 to 50%, we can really start to look to sell the euro dollar. But to be safe, I think stop loss should still set above 61.8%, or to be more safe, above 70.6%. But you just don't want to set it too high, that it actually affects the overall reward to risk ratio. Then it becomes quite meaningless to take this kind of risk, and like 1:1 risk to reward. Okay, it doesn't really make sense when it comes to trading. Okay, so you want to be careful. Okay, when it pulls back, okay, wait for resistance, and when the price start to fall, then you want to sell again. So that's for the euro against US dollar. Then next we have the gold. Okay, one more before I pass my turn over to JJ. So for the gold, right, let's look at the day charts. All right, so in the daily chart, right, actually the price did develop quite as expected. Okay, is that the price actually pulled back further. Okay, but has yet to be able to continue to rise in this case. And if we look at the 4-hourly charts, okay, we can see that the gold has already completed, okay, 2 wave of a retracement. So over here, okay, we can see that it has already created a falling channel, okay, to somewhere here, which is also a demand zone, because this is where the price actually broke above the symmetrical triangle right here. So this is a demand zone, and we can see that when price reaches this level, it rebounded off, okay, and there's still buyers coming in. But because it's coming to the end of Friday, so maybe it ended here. So this week, right, if let's say at the very beginning, okay, we saw that the gold, okay, the price actually shoot up, okay, breakout of this inside bar structure right here. Okay, you can see there's an inside bar structure right here. If it's able to break above this inside bar, right, then when it pulls back, okay, when it breaks above, okay, if it closes above, okay, we want to wait for price to pull back again, okay, back to this level at the top right here, and then we want to look for an opportunity to buy again, okay, to long the gold price again. But however, if let's say the price were to were to sell at first, okay, then we want to wait for the price to retest the demand zone at the bottom, okay, and see if it's able to rebound from here. Possibly it may form something like a double bottom. So that's one chart pattern that we can look out for if price were to sell were to fall at first and test the previous low right here. Okay, so these are the 2 types of scenario we can decide when to go in for a buy, okay, for the gold. So that's what I'm seeing right now. But if let's say the price goes all the way down and breaks below this zone, chances are it might start to turn bearish and start to go down further. Okay, this we'll still have to observe later on. Okay, so that is for the gold. And right now I will pass my turn over to JJ.
Okay, so this week we'll be looking at dollar CAD. As we can see, it's still trading within this major consolidating range. And for this week, price has gotten supported and went back up to the range again. So if you can see in the smaller time frame, it went back up to the top of this consolidating range and it got resisted here. So this week, similarly to the 2 previous times, as you can see, every time it goes to the top of the range, it retests again before coming down back to find support. Similarly for this part here. So if this week price comes back up near to the top to retest, we can look for an opportunity to sell the dollar CAD. And next would be the pound dollar. Yeah, as you can see here, after it formed the head and shoulder pattern, it broke below this neckline and also below this demand zone, which is now a supply zone, before coming back up to retest. As you can see here that it got resisted and started to fall again. So our focus for this week would be if price comes down to this 3-year demand zone, which just nice is in the price level of 1.2, we can look to buy the pound dollar. Because as you can see in a larger time frame, right, every time price came back down to this 1.2 level, which is the 3-year demand zone, it got there's strong support being seen in this area. And as we can see price now, after the head and shoulder pattern, it's been forming this downward falling trend line. So we could definitely look to buy in this area, or if We could wait for a confirmation, meaning that if price does get supported here, breaks above this falling trend line, we could wait for then a retest back down before buying the pound dollar. So this would be my two analysis for this week.
All right, great analysis there. Thank you, JJ, for your sharing. So right now I will continue to share. Okay, so the last one I'm going to share will be the Dow Jones. Okay, so for the Dow Jones, okay, what happened last week is that price actually shot up. Okay, but after which it was not able to break above the top of this range. So in fact, what we are seeing right now for the Dow Jones, right, is actually ranging within this resistance and support. Okay, so what happened for this week, right, is that we might want to look for opportunity to sell again, because okay, if you look at the 4-hourly charts, okay, you can see that this is a very strong bullish trend upwards, and we also saw that the price got resisted at the top of the range and it started to come down. Okay, and after which it just continues to range, and that actually also caused this rising trend line to be broken. Okay, once it's broken, it came back somewhere at the top again, got tested, and started to fall again. So right here, if we look at the 1-hourly charts, okay, so it's actually forming a descending triangle. Okay, this is the trend line, and this is the support that we can see right here. So what we have to do for this week is simply, okay, wait for the price to pull back a little bit further, okay, somewhere to the previous high right here. If price got resisted, then we can find opportunity to sell again. Okay, first looking at the bottom of this descending triangle again. Okay, if the pullback is weak, okay, there's a possibility it might break lower. But just watch out, okay, right here, okay, because if you were to sell right here, your stop loss will be just nice somewhere at the top right here, and all the way to the bottom will give you about somewhere close to 2:1 reward risk ratio. So that is what we want to do. And since we saw that the Dow Jones is already now trading at the top of the range, okay, there's a good chance that price can break even lower, okay, all the way to somewhere near the bottom of the bottom of the range again. And that will give us a very good it will be a very good price to enter with very tight stop loss. And of course, a very good amount of profits will be made from it. All right, so that's for the Dow Jones, and that concludes what we want to share for this week. So thank you for watching and your support as well. So we'll see you again next week. All right, thank you so much.